So what's the point of doing this exercise? First, I want to find my own kind. So that's the broad, larger, big picture objective. We will ask embarrassing questions in the context of markets, human behavior, volatility, what happens to the systems that feed into markets, which means media, analysis, brokers, the mutual fund industry, the exchange industry, etc., etc. So we will question everyone with some very embarrassing questions. We may or may not seek to answer them. Sometimes there are no answers, but we'll at least try to identify, in the spirit of the child who said the king is wearing no clothes, that all of these insights will fly in the face of the public consensus. That why is it that nobody can see that the king is wearing no clothes? Okay, so there are these debates that are going on in classical finance, in behavioral economics, in buy and hold investing, in so-called fundamental investing, in so-called the idea that investing is a science, investing is an art, what it really is investing, that investing is a profession. I mean, I want to even question that.
My question is, when you're saying embarrassing question, why do you think those are embarrassing questions?
They are embarrassing because they fly in the face of the public consensus. See, there is this thing about humanity, that bad ideas take root. Good ideas don't take root. There has to be something bad about an idea before the crowd accepts it.
What do you mean by bad? You mean irrational?
Bad ideas means the earth is
Idiotic.
flat. Idiotic, the intuitive. You stand in front of Juhu Beach and it still looks like the earth is flat. Okay, so, but it took a long time for people to accept that the earth might be anything but flat. Nobody asked the question that if there is water on the earth and there is gravity across the earth, how come the water is staying on the earth? What shape would the earth have to be? If you don't need a telescope, you don't need Galileo to tell you all this. You can take a pen and a paper and tell me that the only way water can be on earth. It's so obvious. And yet it was a bad idea that stayed with us for centuries. Nobody sat and thought about it.
No, there were people who thought about it, talked about it, but the fear of persecution.
So why does the crowd always persecute the fellow who says that the king has no clothes?
They're coming from
Why did it take a 4-year-old child? Why did not a single adult in that fable have the courage to say that the king is not wearing clothes? Why did not a single adult stand up and say, I cannot see those clothes? Because implicit in that would be the admission that you are not wise, you are not smart, you are not intelligent.
So it's more about looking smart than being really smart.
Which is the first ugly truth. We are too busy looking smart. And in looking smart, we end up herding. We all conjoin with the herd. We will not stand apart and ask a very, very sensible question. Ki ye kya ho raha hai yaar? Why can nobody not see it? I've been a contrarian investor, a cyclical investor all my life. And every time I buy, I can't find one person who is willing to agree with me that, गन्ना उगना बंद हो जाएगा क्या? गन्ना तो उगेगा, लोग चीनी तो खाएंगे. किसी को तो गन्ना उगाना है, किसी को तो गन्ना क्रश करना है. These simple questions people don't ask at the bottom of, let's say, a cycle. Now this is just where I come from, that I've been a cyclical investor, and whenever I am buying the bottom of a chart or buying into a nice bottom, I can't seem to find anybody to agree with me.
I mean, so when you think about crowd behavior, so there is no exploration of truth. It is basically exploration, trying to build a consensus. Consensus is the objective, not the truth. Is that what you're saying? That
Consensus
markets-
is the objective, is how the market is. You ask the market to describe itself, and we talk about efficient market theory. The market pretends to know something that it has no means of knowing. The crowd believes it is always right. भाव भगवान छे. भाव भगवान नहीं छे. Bhav is a contract between two fools in one corner of the market. भगवान छे नहीं है, वो तो एक्सचेंज ने डिसाइड किया कि भगवान छे. एक्सचेंज तुम्हारे MTMs को based on the closing price of the day will decide what your MTMs are. इसलिए भगवान छे. भाव डंडा छे. भाव के बेसिस पे तुम्हारा MTM बनता है, भगवान नहीं है. गॉड इज ऑल नोइंग. भाव को तो कुछ नहीं पता है.
So from the earlier discussion we were having about emotions being a reaction and not indicator of a truth or a fact. So can we talk more about that?
This we know from the rest of life. Emotions are merely a set of algorithms given to us, which happen to survive, happen to be there, happen to be resident in someone who has survived for 65 million years. We don't know which of those emotions got us here. We don't know which of them worked. We just assume that if something has survived in us for 65 million years, there must be something good about it. Not necessarily. We know that evolution does not always choose rightly. So therefore you've got a set of emotions. Now you have a specific application, and that application is efficient markets. Are markets efficient? What is the meaning of efficient? What are markets really trying to do? Markets are merely the agglomeration of opinions, and we treat them as fact. So when you treat opinion as fact, what will happen? You will create a mumbo jumbo. The math of the market, technical analysis, numbers decide numbers. ये support हो गया, वो resistance हो गया, sorry नहीं हुआ तो stop loss लगा लो. You go to a potato market, एक कोने में two idiots have decided to trade. किसी को एक डॉक्टर साहब आए, उनको जल्दी है, and 500 रुपए का पोटेटो लेकर के चले गए. उनको जल्दी है, it makes sense. But is that the price of potatoes? Is that the cost of potatoes? Is that a reasonable profit for the potato trader? Isn't that how you decide the price of potatoes? Or should you be deciding based on डॉक्टर साहब को घर पर जल्दी पहुंचना था?
No, that is recently in any kind of management studies, if you talk about it, it's called customization, personalization according to the customer's behavior. So the customer is, let's say, not knowledgeable about what potato price should be. Then based on what his wallet size is, pocket size is, they will charge him that. So that's selective pricing, which is part of a lot of modern businesses, platform businesses, where it doesn't matter what the cost or what the real price of anything is. If you are a conservative user, you will get a lot of discounts, you will get lower prices. If you don't care about money that much, it's a small part of your wallet, you will pay a lot.
So you are explaining price dynamics.
No, I'm saying that this is the crowd psychology of the modern world.
So perception is fact, no?
So nobody is asking if this is the right price of something. People are only saying, can I afford it?
No, how is that relevant to
because in
stock
SIPs,
prices?
if you look at SIPs, the trend of SIPs we see in mutual fund industry is that nobody is asking at what price I'm buying these stocks, which the mutual fund is buying for me. They are only saying how much of my savings I should put in SIP.
So the only one benefiting from this is the mutual fund
industry. So basically, if you have savings of, let's say, 1 lakh rupee a month, you will put that, and you will not ask what you're buying in return for that. You just are buying because you have that extra money and you want to pretend, you want to look like you are saving.
It's another form of momentum investing.
I'm just saying, is it different from, let's say, 30 years back, 50 years back, where people, when they used to go into the markets, they would go with an intent to make money and not just, have a portfolio because everybody has a portfolio.
Yeah, that's one. The other thing is that whatever happens over the years, however much people get educated, you have added professional qualification, MBAs, CAs, CPAs, etc., etc. The structure of the market, the people who make money and the people who lose money hasn't changed. No amount of education ever educates the population. The masses don't get smarter. So what is happening? We know momentum is momentum. It has certain characteristics. If it walks like a duck, it talks like a duck, it is momentum. Okay? So prices are going up because prices are going up. That is the root of a bubble. You know, and you can stand back from a bubble, and when you see that the justification for, buy gold, buy silver, buy whatever, buy real estate, or buy anything that is in momentum, buy defense, all of it, the logic is never deeper than it's going up. Kitna ho jayega? So whenever you hear kitna ho jayega, okay, from two certifiable fools, the guy who answers the question is a bigger fool than the guy who asks the question. If you take a question like kitna ho jayega, then you know you are talking to a fool. Okay, this is the basis on which crowd behavior, which we call a market, moves. The human mind can only process one derivative at a time. So the moment you go to the second derivative, the third derivative, the fourth derivative, P by E is in the market because everybody can calculate P and E. If it was P square by E squared, it would not be in the market. Why? Not because it is not relevant. Simply because nobody can calculate it. So it has to be simple. Only simple messages get through to the market. If you convert it into FCF or DCF,
So yeah, people have a lot of problems.
there will be nobody with you.
FCF is a very complicated idea even for very highly educated finance professionals.
Yeah, that's in the details. The point I'm trying to make is that we will be asking these embarrassing questions through this and trying to look for our own kind of people. People who look for the answers to these embarrassing questions and who want to learn. Or at least agree with us when we ask these questions. What really is efficient market theory? What is the meaning of efficient? Is a human being efficient? When is a human being efficient? When is a market efficient? And when a market is not efficient, what do you do?
The problem I have with the efficient market theory is that it takes the average. It says that average is the correct price of the market. If 100 people are deciding on a price and the average is what the market is deciding, it's correct. But there is no saying that 100 of them, let's say average of them, will be correct, because always there is a tail end. Somebody will be heavily incorrect and somebody will be heavily correct, right? So based on that, if everybody is a perfect market, we call, right, there is demand and there is supply, and then you meet at the midpoint. That never happens, almost never happens.
That is about individual as market. Now, let's agree with the fact that all of them put together is a market. So, you get 240 people to guess the weight of an ox. Just like the market, everybody is trying to guess tomorrow's, price of the stock. And buying at a sufficient discount to the future price of the stock. That's the objective of the market. Everyone is trying to do that. And what do you find? Some people are absolutely wrong. Some people are quite right. Okay. Put together on an average, you get a certain price, which is the price at which the market is quoting you the price of the stock. Now, this is on one day at one given point in time. What happens the next moment? All of that has changed. So the market is what is called a stochastic. It's a snapshot. What the market is today, the market is not tomorrow. It will not be a week from now. So in this stochastic, what happens to 240 readings, snapshots of this? Who is right now? And then you'll find that it's not a bell curve. It's not that one person is vastly wrong and one person is very right. No, one person is systematically right. And one person is always wrong. And the person who's always wrong is a very poor learner, thinks very arrogant, thinks that everybody in the world is wrong except him. And the person who's always right is humble, is learning. So that creates the 3:97 structure. 3% of the people, it comes from the Pareto, 3% of the people will take away most of the losses of the remaining 97%. This is the trading paradigm. So the market is efficient, but within that efficiency, they don't tell you that 97% of the people are wildly inefficient. And the efficiency is so-called efficiency, which is nothing but reversion to the mean, is provided by the 3%. And that dynamic equilibrium creates not an efficient market, but a wealth transfer mechanism. That 97% of the people, arrogant, stupid, self-confident, overconfident, thinking that they know, they are the ones who are losing their shirts. You go and look at the F&O market, you'll find exactly these ratios. And it's not going to change. खूब एजुकेशन कर लो, खूब RAs को ले आओ, खूब RIAs को ले आओ, सबको ले आओ, nothing is going to change. The structure of the market will remain exactly what it is, because stupid people are stupid for a reason. Learning people are intelligent for a reason, and it's not because they've got a degree. It's not because they've got a certificate.
Actually, certification gives you a lot more confidence than you should have.
Overconfidence. It is the CAs and the MBAs who lose most of their shirts in the market. They are the ones who are most prone to overconfidence. I've seen this in all my lectures. So, a professional qualification gives you a disability in the market. Thinking that, जानते हो मैं कौन हूँ?
So, I mean, this is a good introduction, but what can we look forward to further?
So, the final objective of this is to kind of recruit, find my own kind. And it won't be a CA, he won't be an MBA from IIM Ahmedabad.
Not necessarily, but he can be. But
he can be like you.
Yeah, I want to stay on the team.
Okay, so no, your education followed your attitudes. You got educated later, but you got filtered for attitudes. So in our case, I'm not looking for an MBA from ISB. I'm going to create an MBA from ISB. I'm going to first recruit for attitudes, then impart the skill. And the skill is going to be soft. It's going to be neuroplasticity. You will come in, hopefully a blank sheet of paper. You will find these videos hopefully interesting. And if you take to the water, then I know you're a fish. It's a different matter that we will get fish to fly.
So I don't want to scare people away, but let's say if we can find people with this initiative. So we'll keep talking about this. We'll continue this.
So see you guys. If this interests you, please join the gang. We will be using this, posting such videos regularly. Trying to ask embarrassing questions. Maybe we won't answer them immediately. The whole idea is to pique your curiosity, to get you to come and ponder these questions along with us. Yes, we have answers, maybe not all of them, but we have quite a few answers, and that is where most of the insights that we use in investing and trading for our prop book. That is where our insights are resident. So first, get the questions. The answers will follow.
Get in touch. We will come back with more episodes in future. Thank you.